Good morning. All right. Markets are up a bit here. And interesting, just Facebook just popped up on here. I don't know if any news out, but interesting that it's pulling back. It still looks great, but interesting that it is pulling back here. Uh, as the market's up here, Dow up 134 points. We'll see where that goes. That looks like a bad tick. I'm not sure, but sure, if it is real, it suggests it's going lower, and that is certainly likely to have an effect on the FDN here, which is up a bit and looks great, and like it's going to go higher, like the rest of the markets. XLK continues to move up here and looks fantastic. So, looking at we've been looking for this market to go higher, and it's been an erratic day-to-day chop, and now it's broken out, and that suggests, well, this is going to make new highs today. We'll see if it holds on to it. But since it's new all-time highs, which I believe it is, let's take a look. Yeah. Who knows how high it'll go. So that's saying about sell in May and go away, certainly not working out this year. Looks like if you went away in May, missing a big part of the gains that have already happened in May. So let's see what things are at. S&P's futures here are just inched over the top of this resistance. Looks good. And so let's move. Well, I don't want to get too ahead of ourselves, but that would be our next reference point. And, those overlapping bars would be the first place based on that resistance where it could stop. But always, when I look at resistance, I always measure it against the support and base that was created. You're welcome, Neil. Glad you enjoyed it. And, so we got the, that sell-off or the retest of the sell-off, and then this bottoming pattern here and this bullish consolidation. And this 2-bar reversal, that was the lock. So even though we had, this down day on Thursday, it's rare to see a reversal like this, like a bullish 180, actually fail. So, it didn't. And now we've got a strong area of support. It should never even get down to this point in the near term, meaning this should just continue to push higher from here. Yeah, there's going to be some pullbacks along the way, but unless we get a breakdown, and I always have two scenarios, even the ones I don't want to really think about, but if we were to get a breakdown below this low today, that's going to mess up the pattern. It wouldn't negate it, but really not what we're going to want to see. NASDAQ looks great. And so should go up to there. And of course, is it going to make new all-time highs? We shall see. And right now, this says it's going up into that area up there, maybe new all-time highs. We take it day to day. So I move this line below the wide range bar. Shouldn't go down below that. And ideally, we don't want to see it retrace more than halfway into a wide range bar that breaks out of a consolidation. So any kind of pullback should stay above that area. And ideally, it stays like in the upper 20, 25%. And even more ideally, it doesn't pull back at all. And it just keeps going since it's a breakout. So we shall see. The Dow has been the dog. And like I wrote in today's letter, that possibly, some of those doggy Dow stocks are going to be some that we'll focus on. I have to see how they act here this morning. But a lot of times what was weak begins to bring up the rear and show some strength. So we'll see if the Dow can do that. And you can see the start of this move above these highs here. We've got this resistance right here. We don't pick these kind of setups, even, so I'm going to look for stocks within the Dow. But when we look at, we spiders, we have position in Qs, technology. When we start looking at various patterns, whether it's a particular market, futures, stocks, it doesn't, whatever it is, we look for the best. So even though it's likely the Dow has to follow to some extent and play catch up, why bother with this that has the next reference point of resistance directly to the left, which is likely to be choppy, versus a pattern that has a void and likely to continue to push up. Bonds pulling back a little further here after hitting that resistance. We'll see if they stabilize. That's about the extent of a retracement after a move like this. But this is not what we look for with a wide range bar. Now, this was a wide range bar that happened after making a low. So that was a wide range bar ending versus a wide range bar igniting. In any case, we always look for the same thing with a wide range bar. Stay in the upper half, or even in the upper, 25%, and go sideways if it's going to be bullish, and then up. And that's not happening. It's actually below the low of the wide range bar. Well, not quite, it's almost there. And so that is bearish. So this is going nowhere at the moment. We'll see what happens in the next few days. And oil, what I said last week, that if this doesn't hold here, it looks like it's going to be a measured move lower, which is what looks like it's happening. We had the breakout bar failure. So the measured move lower, we just do this, kind of eyeballing it. So there's the stabilization. And then it typically ends up at the next support point, with a measured move down. But this is something that I've seen happen over the years many times, and it just gives a guideline. But then we always look to the left. The same thing with a moving average. I look to the left to see, is it in alignment with any support? Now, looking at, good morning, Philip, the 200 here, I'm just going to borrow this for a moment. I would look, if it was coming down to the 200, which I'm not saying it is, it's too far away at this point to even consider that. You look over to the left to see if it's in alignment with any support. In other words, you verify the subjective reference point. It's a very widely followed one, right? The 200 MA on the daily chart, but we look to the left to make sure that there's something there. Gold, not interested, just too sloppy. It's not doing anything. Over here, when we were watching it to see if it could break out, it didn't happen. It broke to the downside, and there's much better things to be trading and taking advantage of, like what we're in. That looks like can go higher. And this probably, I'm thinking, likely to be more choppy. Let's just take a longer term look at this. Yeah, so it's just nothing that's going on here. Eventually, it probably breaks out from here. As the markets continue to go higher, and then they'll be looking for the Fed to raise interest rates, and if they're slow to that, then the inflation jargon will start to come out, and that may perk gold up, but that is a ways off. We're just staying away from that for now. And, Dan will cover what's moving, but, Apple from last week that we initiated a position in looks great. It's up a little bit here this morning. There's nothing really exploding this morning, but things moving up in a, easy paced way. And they look like they'll continue to go higher. This IQ looks new all-time highs. That looks great. I can keep going higher. Google looks good. I saw that, Dan. I came across, it was in some news. The LXOX, I've got it written down. Oh, XO. That looks good. The VMBA W that started a move on Friday. That looks good. It's consolidating here. I got that on my list. And this is something new, and not new, but I haven't seen it before. There's Dell Technologies. That looks good, like it continued to go higher. So we're looking for the markets to continue to move up. MU, which actually led, looks like it's heading down. So maybe if the market gets a little sloppy or negative, maybe I'll go to this for day trades. Probably going to go lower. And what else here? Well, our Twitter, which I exited from, I think some of you maybe still have it. It's pulling back here a little bit, and we'll see if it can consolidate here. But nice uptrend, looks good. We'll come back to it. And I read some news, Tesla, there's a vote tomorrow, I guess whether they're going to support Musk or not. And that's probably going to have some effect on this tomorrow. So right now it's just kind of choppy and sloppy, but we'll see what that does. And what else? Oh, look at this thing. This is why these stocks we stay away from. My goodness. How many people got sucked into that on Friday? From below 80 to 92 to down to 60. That is just a heartbreak for those that own this for Friday. Terrible. Anyway, that's it. Our expectation is that the markets go higher. We'll look to buy pullbacks, and the broader markets add to positions, and we'll see what this week brings. Take it over, Dan. I assume Dan is here.
Yeah, good morning, Soundcheck, everyone. Hope everyone had a great weekend. All right, yeah, hey, Lita and everybody. All right, let's do our normal routine. Look at our opens first and then some gapping plays. And I did find a couple good things, but we'll just take it from the top. Greg always already looked at it, but we have spider put spread, we have Q put spread and directional. That looks great. We have IWM. We're going to add to our portfolio today over the highs. Cake. And covered call, it's a mess, doing nothing now. Intel, we had some puts expire worthless last Friday. We have some more that expire worthless in 2 weeks. That looks great. Bib, we're still in a half lot of a put spread. That looks great. S-Fly, we have break even now, put spread. Moss, put spread, it's kind of a mess. Facebook that Greg showed you. Now, see, I think I'll do a quick little video later just about how we manage our credits, because here, I'm going to show you the exact instruction. Look, this is for our weekly put spread. Read that description. So we did a way out of the money, 51 cents. We closed half into Friday's rally. And, the decision for me was, should we cover it all and eliminate 5 days or 7 days worth of risk, since I was talking Friday, or try to squeeze a little bit more out of it because the pattern looks so good? And now it's gapping down. And I don't think we're going to get hurt, but that's the discussion on trying to squeeze as much juice, meaning profit, as you can. But so that's the issue there. Square, we have a put spread, still looks great. We're trailing stops now because we are close to maximum profit. So I just went into trail mode. Google, we covered half into Friday's strength. That still looks great. Now it's just like this one. We're going to see what the midpoint is. When you know, do you just want to let it expire worthless, or do we want to get out at pennies to avoid it? There's two reasons to get out: pennies to avoid gap risk and to free up capital. Those are the two. And well, I'll give you a third reason. So you don't have to babysit it anymore. You know, instead of it being in your open positions, it, you know, will just go back to a regular, look for a new setup. Yep, WWE is actually in my gap list also. Yeah, I'm in that one too. Yeah, Dan, I'm not done. I'm continuing through my list here. Yeah, GE or WWE looks fine. Yeah, no worries, because I do forget sometimes. Yep, I'm in Zebra too. It's been lagging. We're going to keep an eye on him. I can't see where it's gapping. GE, I did a little video on that I sent out to everybody, all our subscribers. You know, because well, if you watched it, it's self-explanatory. But somebody was asking, you know, in a nutshell, he was saying, Dan, you know, this kind of looks bad on everything. And I said, well, yes and no. And I analyzed it, all the reasons. Climactic monthly, we drilled down, we had a breakout from a head and shoulders weekly. We entered on the daily, it was an income trade, and whack, it went against us here. Our break even in 2 weeks, because it's in June, is $14.53. So it's against us. So, you know, we're just managing it right now, but it's right back to major support. Into it, we have a covered call directional. That looks great. But the covered call part is capping our gains. So I'm going to be, you know, a tough call again. Do we just leave it because we're still making some time decay? Or if the markets are in full bullish mode, then I might roll this one. This is what I call an offensive roll. We would be rolling it up and actually paying a debit, but we're doing it because of our expectation of greater profits by doing that. So, you know what, that's, you know, I'm going to try to start doing just some real quick little, you know, videos and send them to people just as the reinforcement of concepts. And there's one right there. That's another quick video I can do called offensive rolling. Defensive is when it goes against us, but the pattern's not destroyed. I just want more breathing room. Roku. I'm going to be watching this one as a new, in fact, I was trying to get filled as a new trade last week on Friday. But look, gapping up and holding well. 4-bar pullback, rising 20. I'll be looking to, we're already in it, but I'll be looking to sell more. IQ, Greg mentioned, we're at half of that. And again, today might be the day to close it out at pennies. So when I, you know, start updating trades in 30 and 60 minutes, that's a candidate to close out at close to maximum profit. Grub is going to be a new put candidate. Let's see. Yeah, these are all new trades, so I'm not going to go through those. And it, oh, spot I'm in, but oh no, we are. Yeah, we're in that too. So we got a put spread on spot. And that looks like all of them. I'm also in a little put spread on GM, but so that's an example. It's expiring this Friday. And it's like, you know, 2 cents to cover it. But I'm way down here. I got like the 36, 33s. So I'm not going to even cover it for 2 pennies. because the odds of it closing above 36 is just staggeringly high for Friday, unless, something really, really bad. But, I couldn't fault somebody for closing it out at a penny or two. New trades, here we go. PBR, I saw it on the ticker, 1080. There's absolutely no pattern there, so I'm just hitting the delete button. Yep, there's the Nictar Greg's mentioning. So yeah, Nictar, that was a bullish close on Friday. Bottoming tail here, breakdown failure, deep retracement, higher low, deep retracement, not a higher low, but major support, wide range igniting. Yeah, people, welcome to trading bios. So the IBB, yep, it looks like 109.63, so gapping down 21 cents is all on a $109 stock. That is peanuts. I like this IBB. I'm going to watch it for a new put spread candidate. But I remember, telling you that I like XBI better because it is more liquid. And in fact, I just looked over at my XBI thumbnail, and it's actually up. Look at that, 97.19. That is amazing. And that's another example of, even though they're the same sector, you got different components under the hood. I mean, there's nothing to do with XBI now, though, because it's up 1, 2, 3 and gapping up. But yeah, that's telling me there's still strength in this sector. Budweiser has been a dog, but 96.86. It's in a downtrend on all time frames. But look, it's gapping over this 2 weeks of consolidation. So this will be an excellent put selling candidate. I'm going to put that in a window. I like that one. ATRO. I thought it was gapping up. I can't tell, so we'll come back to them. 85.05, actually gapping down. Nothing there. Just gapping right back to the base. Old Merck had a nice 1, 2, 3 here at resistance, but from a base. This thing is sloppy, but gapping up 61.56. So it's a nice gap breakout. We'll watch that, but if we're getting into the ETF, the XPF, then, we don't need to fool around with Merck. GSKY. I thought this was gapping up, but in any event, I like it either way. So it looks like it's trading at 26 bucks. What type of, okay, well, what type of trade is this? SOH, sit on hands. No, I mean it's a climb. Even though you can't, because it's an IPO, obviously, right? So there's no moving averages yet. Or at least there's not a 10 or greater, because it's only 1, 2, 3, 4, 5, 6 bars. I don't need a moving average to tell me that the vertical move up is extended. And then Friday had a narrow range bar closing under the open. So it's tired. So it's actually a short watch for me. Either 30-minute low or 15-minute sell setup, double top, whatever the case. And I love IPOs for new trading toys, so to speak, in my toy box. So, and it is optionable, but it's crazy, crazy spready. Green sky. Green sky. What the heck is a green sky? All right, because he's too spread, well, I'll just leave him in my inbox in case we want to trade the stock, but that's what I'm thinking there. Pan W, it was gapping up here, you know, 710-ish. Look at all this major support on the weekly. You know, I had a nice breakout here, right there at 270, 270, 80. That would have been a fantastic entry over the high of that bar right there. Right over 280 would have been a no-brainer trade. You know, it's getting extended here, wide and whippy, but look at all these lows. Low, 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 low. So that's what I like, the major support. I have a wide range engulfing on Friday. Yeah, monthly's a mess, but okay. And we're gapping up to $7 now, which is, you know, right there. So it's a candidate. We're gonna watch it. The LOXO we talked about, it's just too extended for me. I've never heard of this stock. Let me see if he's optionable and how spready. LOXO Technologies. And 185. Yep, another one just too darn spready for me. But that's a watch on a pullback. CMG. I like CMG here. Look, this is a nice tier 1 trade. Pro gap, no retracement, consolidation through time. You know, even though this wide range breakout, you know, failed, you know, breakout failure, it didn't fail. Meaning, well, it did right there, but on failures, you expect further retracement, and this held this whole support area. Bullish weekly, I'm going to put this in a little window. It looks great. As a put spread, there's still a price void on the weekly and monthly. All right, I better speed up here. Macy's was just, you know, it's a news play. Some guy on the news said he was a penultimate short, and he's just flipping his view that, oh, now it's a long. Yeah, whatever. IQ, we already reviewed. Pawn, sure. All right, this one, it's very nice gap up here, but it just, you know, look, it's been dead for a couple of months, but something's going on today to get it out of its grave. We'll watch, you know, watch that one. Pawn. I think you mean Pan W, because I have that one in my, we just went over. Oh, did I skip Pan W? Because I have it right here. Yes, no, I like this one too. Yeah, I guess I skipped over it because, yeah, I have it right here. I like it. Gapping up. I'm going to put that in a window. Yeah, looks great. All right, Cron, VSAR, that's the one we just did. ISRG. I like this one. Look at this. Pro gap out, back to support, consolidation, up, higher low. This is support, wide range igniting. It's gapping up $2 at all. It's pulling in a little bit, but I like this one. So yeah, I told you, we can always find trades regardless of what the broader market's doing. MU. Wow, that was loud. MU, nothing to do, but McDonald's, I just saw on the news it was, oh, they're moving their headquarters downtown Chicago or whatever in Chicago. Who cares? That's just a big mess of nothing. Delta, I just was looking at because American Airlines was saying, hey, we might have to raise prices because of high oil. And we have been watching these airlines for bottoming patterns for put trades, but there's been no juice. I like this oh, that's the one Greg said. Yeah, gap up. If this were to close right here, that would be a bullish 1, 2, 3. And then, yeah, that's the one Greg mentioned again. All righty, so we're right on time. Today, this would be a fantastic 30-minute high add, or directional rather, because we already have a put spread and we have a directional in the Qs. But remember, I was favoring the Qs because, they were stronger than the SPYs because they already got out of this 2-week consolidation. Yeah, Zen, well, we don't take trades in the first 5 minutes, but yeah, Zen looks great. So let's just watch that for another entry. I'll put that in a window and see if we can get a better entry. CMG looks great. It's, typically, as I said, these market makers on Mondays, I guess they get slow to work. The spreads are worse. But let me just check out how spready they are right now. Yeah, they're preposterous. Nothing to do. Look at that. Whoa, look at transports. We had Greg obviously, talked about them in the weekend letter. But I have that in a thumbnail. That looks fantastic. 30-minute high trade. I'm looking at our FANG stocks. Apple. We only have as a put spread, and I did that on Friday because of the deep gap into it. It didn't break out yet. But today, it looks great, like a directional. Greg, what do you think of a directional right now? I mean, market's holding, that looks great. I'm just looking at the Qs here to add to my position, and I'm going to add some Apple puts here too. But I'm adding some Qs. I think I'm going to do the 172.50 for this, or 172s for Friday. I'm just going to do them naked. 52 cents right here. 53. All right, filled. Because I just wanted some more deltas. Apple now. I see my Pan W, my Bud, and my CMG are all coming in, and that's the beauty of having those little windows. Apple, let's see what we can add for Friday. Now, well, it's kind of extended on the hourly, but the daily looks fantastic. So let's, the 187.5s are only 38 cents. All right, I'm going to be a little more cautious. All right, let me take a look. I'm just adjusting some of my own positions here. Like I said, I'm getting a little bit more. All right, just doing some adjustments there. Please look at Wix. My pleasure. Wix. Never heard of Wix. Wow. Looks great. I mean, it's 3 bars up on the daily, but it's a wide range bar from a very bullish 15-minute on Friday. So it's rested. So I like it. I like it. So let me, you know, if it could be a directional and a put spread. What the heck is Wix? Wix.com Ltd. Yeah, these friggin' option prices. The $90 puts are $190 by $490. Like, give me a break. But even, and here's how you trade illiquid stuff. It's when you, number one, you like the underlying a lot. The 85 puts for 2 weeks are 60 by 220. So you can definitely get filled at 60 by hitting the bid. I wouldn't do that, of course, but you do some price discovery. See if you can get filled at $1.50. Or maybe you go low offer and you offer out at $2.15. But let me check earnings. Because I like that 85 put. Well, let's drill down on a 60. Well, it's right here. So you're just banking on Thursday's low holding, which looks good. I mean, it's breaking out to all-time highs. But then if you do trade something illiquid like this, you got to think ahead of time, like, all right, how am I going to manage this if I need to get out? Because don't think you're going to get out at a good price just by closing your put. So that would mean my recommendation to adjust your deltas, remember back to that discussion, is I would hedge it with the stock. Is how I would hedge an illiquid position. So there's another quick little lesson that I can do for folks. How do you hedge an illiquid option? With stock. Or shorting an out of the money call spread, but you're going to have the same problem getting filled with illiquid garbage. So these were, well, Bud still looks fine. Let me see what kind of juice there is on Mr. Budweiser. I'd sell the, you know, anything here, 93.50 or below. There's nothing for Friday, and he's spready. And the 93.50s for 2 weeks are only 45 cents. That's not much juice. Pan W, see, now that's a gap and crap. Aren't you glad we stayed away from that? That's an ugly reversal. CMG is, well, there was a tail there, and I think it is real because I was sitting there watching it on a 5-minute chart. But it's whippy now, and we already said the options are spready, but we'll come back and look at him in 30 minutes. XBI, see, it's just too extended. I can't do anything in that. Semis are still looking great. Look at XLK is a beast. Apple's a beast. We're in half of Google. See, I could manage some opens right now, because what I would do on all these that are getting close, I would, you know, take the time to see what the midpoint is and just cover it. But I think I already have a bid, you know, where I say, hey, let's cover half here at 20 cents and bid 5 cents for the back half, something like that. And that's where you're going to get filled. Yeah, look, here again, just as a management lesson, look, there's our Google for the weekly letter. So let me see if it got hit, 1065, 1055. $10.65. Nope, the midpoint is 15 cents. So I have nothing to do. There's the trade, there's the adjustment. Nothing for me to do on Google. Look at our Tesla. I gave a put spread, but we aren't going to get filled because I gave a limit. Well, I said midpoint of 60. Let me see what the midpoint is now. $275. Now, while I'm talking through some of these trades, if you all see anything tier 1 in the batter's box, then tell me. Nope, the midpoint's only 27 right now. So as of now, we are not going to get filled. On this Facebook that we have half that I talked about pre-market, let me see how much pain we're in, which I'm telling you right now, there's going to be very little, but just relative to the gap down. So 182, we have zero pain. Look at this, folks. The midpoint, this, let me show you Facebook. Well, it's recovered, and that's part of the reason why. But it's still below Friday's close, right? The midpoint to close right now, Facebook, is still 8 cents. That's where it was when I made the prior adjustment. So because of time decay and it being far out of the money, we have zero pain in this gap down in Facebook. Greg Alex is asking you about this. It looks great. Oh, it didn't tell us you're trading this 5-minute chart, he's asking.
You would have already been in it.
And look, all of this, see this green bar right here? That's the bearish gap that bullies. Then the next day had another gap up. That's a very powerful reversal right there.
That's a perfect 1, 2, 3.
Netflix is getting a little sloppy. Amazon, another nice day. Man, we were talking about a directional all 3 of these days. Microsoft, we never got filled on our put spread. Intel, let's go through some of these opens. Intel's looking great. CSX, we have a covered call. And let's see, this is a great pattern that over last week's high, I think we should close this short call because I don't want to cap my gains. These are all open. Oh, I forgot SPWR, the pre-market. We got a put spread there, and that's sloppy. Wow, look at this IQ. Okay, now let's see what
Yeah,
the
Boeing put spread.
No, I already have it in the letter.
Okay, maybe somebody in the room wants to do it.
My alarm didn't go off. Shoot. I set all my alarms pre-market. Shoot. Okay, this was the alert, folks. So let's analyze it together. Do we want to change the entry? Let's see. So we said 350, 340 midpoint, but at least 90 cents. Closed at $1.09. And you know, I get some emails saying, why do I mention the midpoint close? And it's just to put in perspective what limit entry that we're wanting relative to the prior day's close. So now we're going to be nowhere near that number. So we have to ask ourselves, do we either want to take less of a credit? Do we want to go up higher and strike now? Like maybe the 355 or 357.5. Well, the 355s, I said the 350s to give us a lot of cushion. So I'm just playing, I'm looking around here to see what we can do. Yeah, 355 is a little tight. How about the 352.50? Yeah, see, there's no way we're going to get that credit that I said. Currently, that's, so let me just type it here because it's a mouthful. All right, so here's where we are right now relative to the post over the weekend. We would have to go 2.5 points strike price higher, right? 352.5 versus 350, and take less money. So, and there's no right answer. You just have to ask yourself, is this as a new trade worth those numbers right now? I don't know the answer to that. Or maybe watch it on a pullback and see if we can get 90 cents for this spread. But I'll put that in a window. I'm going to get rid of pan W. Any other? RTN, I missed that one. Okay, we're also in RTN Condor. And I have alarms up and down. But I have a question for you. So we have a condor, short condor, which means, yeah, John, yeah, let's just wait for a pullback. Markets are stalling right now, so definitely that would be the trade. Wait for a nice controlled pullback with the broader market indices holding, and yes, that's the strategy. But my question to you, to everybody, we're short the out-of-the-money call spread. We're short the out-of-the-money put spread. If military sector is strong and this breaks out, we're definitely going to stop out of the call spread, keep the put spread. But my question to you is, should we convert this into a directional long? It's kind of sloppy, so I would say no, but it's a thought. I mean, that would be my inclination. But let's look at the sector. So look at XAR. XAR is actually stronger than RTN. Do you all see that? Because this consolidation is so much higher. Retrace